For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. Welcome back, David.
Thank you, Brandy.
We have managed to go maybe a month or so without a segment specifically focused on inflation. Now, given that, it continues to be one of the main themes in the markets and economy. Could you share any new thoughts on this front?
Yeah, sure. Inflation clearly was the defining theme as far as in 2021 last year. I think it's going to continue to be front and center as far as in 2022 as well. And we're hoping, there's a lot of optimism coming into this year that maybe we could get our arms around some of these backlogs as far as supply chain issues. That clearly isn't the case yet. We're seeing that trend is continuing to be a problem as far as trying to get the goods on the shelves as far as in the store. So that's really crucial as far as for folks to understand and the impact that can have. So I brought along a chart that's going to give people, I think, maybe some insight of something that they're not aware of. And most people, I don't think, are aware of this. And that is when you talk about inflation and the CPI, which is Consumer Price Index, the cost of shelter is not factored into that. Never has been. Unless you've been living under a rock, I think that people are probably aware that home prices have been on fire over the last 18 months. And yet what we see with the chart here is it's illustrating what I think might be a big concern ahead. And that is the red line on the chart shows the CPI, Consumer Price Index again. But what you see is a 7% rate attached to that. That's the highest in 40 years. However, the blue line shows the owner equivalent rent component of the CPI, which is only clocking in at 3.8%. And in fact, has really changed very little over the last 5 years, which basically is really unusual considering that home prices have surged as much as they have. So looking at previous cycles in the housing boom of, say, 2000, we see that the owner's equivalent rent has tended to lag home prices, which is just a matter of time that this could come into play as far as in this cycle.
Okay, so if we do see an increase there, what could that mean for other areas of the economy?
Well, definitely it's possible that this is going to trickle through as far as in the financial markets. We're going to see higher interest rates as far as that are going to take place. If that happens, rents probably move upward, which then has less money in consumers' pockets as far as retail spending. So this is a ripple effect that we're looking to. Don't know for sure, but it sure looks like it. So less disposable income. Not a good scenario, but to summarize it, bonds could be under tremendous pressure in this environment that we're illustrating. Real assets, commodities, and real estate could add to the gains that we saw from last year, 2021.